Today we're going to talk about treasury stock. You used already to common and preferred stock. Those are regular equity accounts and normal balances are credits. Treasury stock is unusual contra equity account. You are used to other contra equity accounts. I actually recommend to pause the movie now and think for a moment. What other contra accounts do you know? What is a common thread among other contra accounts? Not contra equity, but you have heard other contra accounts. So again, treasury stock is a contra equity account with a normal balance debit because it's contrary to a normal credit balance for other equity accounts. So let's take a look right now. Boomer Corporation acquires 100 shares of its $4 par value common stock at $15 a share and holds them as treasury stock. Well, what happened here? The company must have potentially needed treasury stock. They went ahead and bought it, and they had to spend cash for those. So we're going to credit cash, and it's $100 at $15 a share. And the debit will be to treasury stock, and it's 100 shares at $15 a share. We are going to utilize what's called cost method to account for our treasury stock. So please keep in mind that it costs you $15 a share to buy that stock. Keep that in mind again. That's your cost for your treasury stock. Let's take a look at the next transaction. Boomer Corporation sells 25 shares of its treasury stock for $18 per share. So if we sold shares, we must have gotten cash in return. Cash is going up, so I am going to debit cash, and it's 25 shares at $18 a share. $18 a share. What did I sell again? I sold my treasury stock. And I sold 25 shares at how much? Now remember, it's sort of the same idea as when we use our par value for common shares, except since it's cost method, I will disregard my par value and use my cost as if it were to be par value. Again, I'm going to disregard par value and I'm going to stick to my cost. So I am going to put $15 a share right here. $15 a share. Well, I'm off because I actually managed to sell my treasury stock for more than what I originally purchased them for. So $18 versus $15, I am $3 off. And in this case, $3 on the credit side, I get to use a brand new account that is called additional paid in capital from my treasury stock, and it's not over par, it's over cost. So additional paid in capital from treasury stock, and it's going to be at $75. How did I get 75? Well, I have 25 shares, and it was $3 each share over cost. Right away, I will go ahead and open a ledger for that account. So here's my additional paid in capital from treasury stock, and it's your regular normal balance credit. Credit is the normal balance for that account, and I'm gonna write down, here's my $75 that I just was able to get on the credit side. So account went up by $75. One more transaction. Boomer Corporation sells 25 shares of its treasury stock for $14 per share. Well, so far it looks sort of the same like the one before. So cash was received, 25 shares at $14 a share. Now, if you look at the Treasury stock that we sold back, 25 shares, okay? Now keep in mind again, I'm sticking to that cost, and it's $15 a share. Remember that cost. Please again, remember that cost that we've used before. Now let's take a look. What do I have going on? Now that's strange. I paid $15 a share, and now I was able to only sell it for $14 a share. I am now short. I don't have enough debits. That's the time where I get to use my additional paid-in capital when I could not sell my Treasury stock for more than what I purchased it. So Treasury stock, and it's going to be 25 shares at $1 a share difference. So $25 right here that I'm short. So now my debits equal credits. So I'm going to go ahead and post it in the ledger. So $25. Okay, moving right along. Let's take a look at my last transaction here. Boomer Corporation sells 25 shares of its Treasury stock for $10 a share. Whoa! So we went off in 18, 14, and finally $10 a share. Again, we got cash. I'm going to go ahead and debit cash, 25 shares at $10 a share. I still sold Treasury stock, and it's again 25 shares. Now you help me out. What shall I put? Remember that cost. It's cost method, so I will write down $15 cost. Okay, moving right along. Again, do you see the pattern here? Very similar to what you just saw in the prior journal entry. I have cash received at $10 a share, and I purchased Treasury stock originally for $15. So I'm $5 off on my debit side. So I can right away write additional paid-in capital for Treasury stock, 25 at 5. So that will give me actually $125 on a debit side. If you take a look, what do you have right now in your additional paid-in capital? 75 on the credit side minus 75 on the debit side. You only have $50. Again, you only have $50 on the credit side right now in that account. You cannot go into abnormal debit balance for that account, so the most you can use is $50. So I'm going to go ahead and write it out. Additional paid-in capital from Treasury stock, $50. Okay, so now I can post it. That was my balance that I was trying to figure out. So now I'm going to go ahead and post $50 on this side. I close that account. There's nothing left. There's nothing left in there. Now let's see. So we have $250 on the debit side for cash. I have $50 from additional paid-in capital, and I still have 25 times 15 on the credit side. Here's the big difference. What shall I do if I don't have any more left in my additional paid-in capital? Your only left option is go ahead and debit retained earnings. And you do know that by debiting retained earnings, I'm going to go ahead and put it in red to get your attention. If you debit retained earnings, it will go down. But I guess that's okay. We don't have any other options here. So $50 and I need $125, so I will go ahead and put a debit of $75 through the retained earnings. Again, double check to make sure that your debits equal your credits. So couple of points that I want to make. Make sure that if you are using cost method to account for your Treasury stock, you keep it at cost at all times. And remember, I even crossed out my par value so I can concentrate on my brand new cost in here, right here. And one more, if you run out of additional paid-in capital, by the way, do keep track of it. That's why I created this little T-count ledger, so I don't forget to keep track of it. You may not drop below zero. If you do run out, that's the time to go ahead and use your retained earnings.